You're like, we've had a really brilliant year. You may well have done, but you haven't done a BAS for 2 quarters. So you've got whatever liabilities coming out of that, and if there's payroll on there as well, there's going to be pay as you go for your staff members there, superannuation contributions for your team, which these days need to be paid on a very, very timely basis, and it's something the ATO you'll ride pretty hard on. And then tax provisioning as well, because you may not have paid last year's tax because you don't need to pay it on the 1st of July. You can wait right the way through to sort of March, April the following year to pay it, but you do have to pay it. So you might be looking at your bank account going, hey, got this big sack of cash over here, but that goes pretty quickly when you realise that it's already spoken for. So definitely having a really good understanding of the cash flow elements and the tax in particular aspects of what you're doing is key. Hey guys, welcome to this week's Money and Investing Show. This week we are looking at 5 tools all investors should be using in order to stay on track and keep ahead of the curve when it comes to winning the money game. Plenty of things to take out of this, very practical, take plenty of notes, but as always, please do make sure you take plenty of action. Hey guys, welcome to this week's Money and Investing Show with me, your host, Andrew Baxter, and as always, my offsider and co-host, Olarenshaw.
Good to be here, Mr. B. Thanks very much for having me. Now, for any of our younger listeners out there, this is going to be a really pivotal episode because we're going to talk about managing your investments. And I want to really dive into the top 5 tools that all investors should be using to keep track of their investments.
Okay, well, there's an interesting one. I guess this is sort of the practicality stuff as we get towards tax time and things like that. It's good to take a bit of a review on this. So, number 1 on there, I think, has to be your trading platform if you're involved with the stock market. And you sort of go back in the day, there used to be companies that sold charting software and you'd have to pay for your data, and then you'd do stuff, your banana box full of contract notes and your broker at the end of the day. That's all done. All of this stuff now should be done in a singular place, and the reason I think it should be in one key place is that the more portals that you've got to go through, there's more chance that something's not linked up correctly or there's a transposition error. So your trading platform does a few things. It's going to give you access to charts so you can do your analysis, which is an important tool. It's one of our sort of suite of 3 that we use for our analysis, the others being technicals obviously being the chart, fundamentals and quants. Also, a decent trading platform carries with it a really good level of news as well, so you can get your fundamental stuff off there to an extent too. And the platform I use is Interactive Brokers. We're obviously partners with them. And what I like about the way the news is graded on there is it actually says this is going to have a very direct or a very modest impact on a stock. So to give you an example, let's say you were looking at Qantas and an airline had crashed somewhere in the world, heaven forbid, just on one a couple of hours ago.
Touchwood.
That would be a -10 event, and it tells you in bright red letters that that's going to have that news would have a direct and immediate negative impact on that particular stock. And of course, the other way, if there's new airline stock or aircraft that are available that are incredibly fuel efficient and they've just been launched, that will be a +10 for an airline stock. So it's a really good way of actually seeing how the news impacts either on your portfolio, your watch list, or other things that you might have covered there.
Just to expand on this too, I think if I can target our younger listeners here, there's probably, I guess to my mind, 3 levels of this. If you're someone that's just getting started, has got no idea, doesn't want to have anything to do with anything, a good platform might be something like Raise or Spaceships, where you can spend, round up, and have the money invested.
Great way to get started.
Exactly. Second tier, if you just want to sort of play around and poke around, even if you just open a broking platform that's linked to your bank. So if you bank with NAB, you've got NAB Trade. If you bank with Commonwealth, you've got ComSec. Third level is obviously our gig, which is Interactive Brokers, which is proper charting software and market access.
Look, it's a professional tool. And ultimately, if you are going to be playing a professional game, which making money in the stock market is, you do need professional tools. Otherwise you're going into battle with one hand tied behind your back, and there's flexibility with that. You obviously can have it on your desktop or laptop. You can have it on your portable device, or you can have it browser based as well. So a lot of different ways of accessing that. So the analysis side of it, I think, is key. Note with any kind of tool that you're using, the more convenience there is with it, the portability, for example, you kind of lose a little bit of the functionality. So you might have your broking platform as an app on your phone, for example. It's very convenient, but you'll probably lose some of the analysis teeth it might have compared to a desktop sort of fully loaded version.
Indeed.
The other thing on the trading platform, of course, is your record keeping. So your P&L, all your reports for what you've done to keep the tax man happy is also available on there. And yeah, I remember back in the day transposing, your trades from your broking account into Excel and then having the contract note to match it and that lovely manual process. And yeah, that doesn't exist anymore. Maybe some people still do that, but it's all done automatically now.
Thankfully. Well, I think we can all agree, number one, a good broking platform makes a lot of sense.
100%. Good quality data and stuff on it, things like that, yeah, reliable.
Absolutely. Now, you mentioned record keeping there, and I think number two is to have a good accounting software. So personally, I use Xero and would recommend it to anyone.
100%, we use it from a company perspective and we keep everything on there too. And the benefit of that is, again, is probably twofold. Number one is the accuracy of the information coming in because it's getting sucked directly from your bank feed or your credit card or your broking platform in that instance. But also the fact that it's live. And so you have the ability to be able to manage cash flow on a real-time or real-time basis, and that's really important. If your accounts are behind, you're coming into the end of the financial year, and you don't really have a true and fair reflection on where you're at. You kind of feel like, based on your bank account, oh yeah, we're looking like we're doing quite well, but you forgot you haven't done your BAS from the last quarter, so you got a nice bit of pay as you go, and all that different stuff that comes alongside that bill that hasn't been paid. You can see it's outstanding, so you can factor that into not your bank account balance, but what your true balance of money might be, taking into account liabilities that are sitting there. So Xero, I think, is excellent. There are plenty of other competitors to that, but I do think that's a really useful tool. And again, you can plug your broking account into that so it can suck all your trading information there. If you've property, you can obviously bring your landlord reports in there as well. And if you've got something that's negatively geared, of course, you can be claiming your tax back, not at the end of the financial year, but right the way through the year.
Indeed. So number two, good accounting software for sure. Number three, to expand on that, I think, is having a good interface for assessing your financial reports. Because as you said, there's no good having all of that information that's been compiled unless you can understand it and then make decisions based on it. Now, if you've got an accounting team, which we would hope that most of our clients or listeners would, they should be able to provide you profit and loss statements, everything from your cash flow, all that kind of stuff.
Yep, you have to know where you're at. And if you look at it purely from a business perspective, probably one of the reasons, not the reason, but certainly one of the reasons why so many businesses go under, someone will start a company because they've got an idea or a set of skills, or they want to work for themselves, and they're a worker within that business, and they bring that set of skills and dollarize it. The challenge they have is they don't understand how to manage things like cash flow or provision for tax, or understand managing your creditors, for example. You think, I've done all this work, but I've got no money. Well, that's because people aren't paying you, and you've got to change the time frame you give them to pay you, and you have to have a follow-up process, all those sorts of things. And I think having an understanding of that at the most basic level, you don't need to be an accountant. You can pay somebody to do the heavy lifting there and provide you with advice, but you still need to understand the principles of what's going on. And tax is a huge one, because it's so easy to forget that there's a tax liability if you're running, again, I keep coming back to a company as the example here. You're like, we've had a really brilliant year. You may well have done, but you haven't done a BAS for 2 quarters. So you've got whatever liability is coming out of that. And if there's payroll on there as well, there's going to be the pay as you go for your staff members there, superannuation contributions for your team, which these days need to be paid on a very, very timely basis. And it's something the ATO, you'll ride pretty hard on. And then tax provisioning as well, because you may not have paid last year's tax because you don't need to pay it on the 1st of July. You can wait right the way through to sort of March, April the following year to pay it, but you do have to pay it. So you might be looking at your bank account going, hey, got this big sack of cash over here, but that goes pretty quickly when you realise that it's already spoken for. So definitely having a really good understanding of the cash flow elements and the tax in particular aspects of what you're doing is key. If you're into property, making sure you've got depreciation reports so you can make claims. Having your landlord or if you've got a letting agent managing an investment property for you, making sure you get your report each month on to the rent's been banked, and all of those different things. And the devil is in the detail.
So I guess the third one we could probably say is having a good team as a good financial tool.
Yeah, you have to. And you can be an island and try and do it all yourself, but I think if you're trying to do everything yourself, you're a busy fool, and you're a generalist, and generalists don't make great money. Experts make a lot of money, so hire experts in the different areas, and you just become the conductor of it.
Very nice. Love that quote. Number 4, AB, I would say relates heavily to news flow. So where you actually get your information from. Now, important part is choosing who you actually listen to. What do you suggest?
This is an increasing challenging in today's world, and as you know, I mean, I am a news addict, and I love knowing what's going on, and it helps me with my investing decisions and such like. And there are certain places that you can go to the well for your information, where you're getting untainted factual information, and then there are others that are so partisan and through a particular set of lenses that the information you're getting is almost deceptive and misleading. And if you're getting garbage in, well, if you're making decisions based on that, it's going to be garbage coming out as well. So I would say legacy media, mainstream media, is something to be very minded of as not the ideal place to be getting your factual information from. And probably the best 2 examples of that in Australia would be either ABC or SBS. It's just like, don't even bother wasting your time, because it's just going to be such a sugar-coated and diluted version of what's going on. And I think from a financial perspective, I like the idea, and these are places that I use, things like Bloomberg, for example, which is more around finances. Seeking Alpha, which is a news aggregator, is good. And they're agnostic. They don't have a political agenda. They don't have a social agenda. They're just there to take the news and present it in a certain way. And I think as far as like newspapers or news sites are concerned, I'm minded of my old friend from the UK, and that's the Financial Times. And again, it's a newspaper which I think by and large is pretty agnostic, and what you see there is, and it's just not finance news, there's global news in there as well. So it's a very, very good publication. That
Wall Street Journal, CNBC are 2 that I use as well.
Yeah, there are a couple of other places that you can go to in the US as well, as you say, which are great for that sort of stuff, and they're definitely 2 that sit in that camp.
Good recommendations. What I probably urge any of our listeners out there, pop in some tools that you use from a news flow perspective, because I know we're always on the hunt for new sources of information. Our clients are too. So comment below, what's the best sources of news? Where do you get it from?
And I think on the thing to be wary of too is social media, because everything in it is algorithm based. So if it's a subject you're interested in, you're going to see plenty of reinforcing information on that, which is not necessarily an objective perspective on things, and good quality decisions. That comes from a level of objectivity, I think, rather than somebody else's agenda being forced down your throat.
Absolutely. Now, last but not least, as we get to number 5, the 5th and arguably the most important tool is actually a game plan, a plan of what you're actually doing, trying to achieve, how you're tracking things, where you're going, what you could have done better.
Crucial. Failing to plan, planning to fail, the classic cliche. And I think you have to have a game plan in place, because if you don't, you'll just meander or drift. That could be around the stock market, could be around property. It should be more holistically around your entire wealth journey. And one of the things I think we addressed pretty well in the Wealth Playbook, which is of course our book, is that notion of an annual checklist, for example, or a quarterly checklist or a monthly checklist, to make sure these are the tasks that you're attending to regularly, to make sure that you stay on track with what you're doing. Equally, we advocate having a money date and things like that, so that if you're in a relationship, both parties are on the same page with your plan. But taking the time to plan, I've noticed this quite recently with a few different people. When the stress dial gets turned up or you get super busy, the first thing that so many people do is actually cut back on their planning time so they can just jump straight in and get on with the doing. You think, I'm so busy, I don't have time to mess around planning, I just need to get stuff done. When in reality, time spent planning will make what you do, A, far more efficient because you've got a clarity of what you're doing, and B, you'll probably just do it once and get it right. Whereas if you just dive in the heat of the moment and you're a busy fool, you end up having to do something 2-3 times to get it right or get it where you need to. So that notion of planning is crucial. That notion of having regular checkups and touch points to make sure you're on track is key. But you have to have a plan. If it's in business, you have to have a business plan. What are you trying to achieve? What are the key performance indicators that tell you, maybe 3, 4, 5, with probably 4 realistically within what we do on a daily basis here. And some of them are revenue related, as you'd expect, it's a business. And then the other side of the coin of that is more of a anecdotal measure, which is our client satisfaction levels. And those two things, when you put them together, if you're in business, you want a business that's doing well, but you also need happy clients that are going to refer you a ton of new clients. So they're the KPIs that we really look at. The last one on is, for me, at least in a CEO role, is staff and staff turnover, which we have no staff turnover because we have good people. And when we have good people, we retain them. And so that stability then leads into the other key performance indicators. We've got stable. The revenue line then is not affected by people coming and going. If you've a stable team, you've got happy clients because they've got that continuity of care where they're talking to the same person that's got a relationship with them and they feel comfortable with that. So these things are all interwoven, but you have to have a plan. Yeah, and then within there, what are you trying to do? So if it's business, it might be that you're trying to reduce your ad spend by making your adverts more effective or in front of the right audience or communicating in a more efficient way. Not so you can spend less, but you can spend the same and have more people see it, for example. Or if it's trading, if you've had a really poor run in the market and you're looking at your figures and you go, okay, my account's not done as well as I would like, is to do a post-mortem and say, well, why is that? Oh, it wasn't going very well, so I just turned my computer off for a month. I thought I'd see what it looks like in a month's time. Not really the proactive way you look after your dough. If you're in a landlord and you don't open emails or return calls from your letting agent, they say, look, the tenant's playing up. They've not paid rent this month or this week. What do you want us to do? And they've called you 3 times and that's their issue to deal with. They won't deal with it without your instructions. So you've got to be on top of what you're doing. And that all forms part of what your game plan for getting to the finish line is. Now, you got a very clear, we talk about you for a moment, your favourite subject, and soon to be our listeners' favourite subject.
You said it, yeah.
With the wealth plan, as I understand it, and I'm not across and I'm not privy to your plan in detail, but you're constantly making revisions and keeping on top of what you're doing, which is why you're tracking so well to get to where you want to be. I
use the Money and Investing Journal, and that's not biased by any stretch. I've literally got 21 of those journals in my office, plus one I'm using. I swear by it because I've got a plan. I can see where I was, I can see what I want, and then I can make changes along the way.
Yep. And there's small incremental changes that will get you there. Yesterday I was down in Canberra. I had lunch with a couple of our clients down there, and these guys have been phenomenally successful from a wealth creation perspective, neither of them in particularly high paying jobs. They learned how to invest their money from an early age. They got into property, had several properties, pathway you're on right now, built up their wealth and moved into the stock market from the cash flow element of it. And now they're in a position where they're retired. 75, 77 countries I think they've done in the last number of years. Their investment returns, in the last 6 months, he's made 5 times whatever his maximum income was when he was working, yet most people don't want to go into retirement because they're worried they can't afford it. So he's just banked in 5 or 6 months 5 times what his highest annual salary ever was in 5 or 6 months.
Yeah.
And all of this did not happen by accident. It's been a very deliberate plan on their part to get them to where they are now. And it's really interesting. We had a really deep dive yesterday over lunch, and it started when he was 17. I'm going to work some extra hours to save up to start investing at 17. And he's had this constant thirst to not chase money, but to chase buying his time back and to be fulfilled with what he's doing and have that satisfaction of being in control of his financial future rather than the victim of what somebody else does. Only comes when you have a plan. So that notion of having a process, you can be lucky and have a good investment, and we've all had those. But to repeat it is quite different. That requires a process. If you think about the music industry, you could be a one-hit wonder. You put it on some game show in 20 years' time. Oh, who was a one-hit wonder at the Eurovision song? Like, no one knows, no one cares. You might be on your comeback tour at the RSLs around Australia, but no one cares. That ability to consistently hit the mark. Think about the Beatles, think about the Rolling Stones, think about Taylor Swift. All of these groups have got an ability where there's a process that keeps delivering what they want, that keeps them in front of the curve and successful. Investing is just the same. Baking or cooking food is just the same. If you have a recipe, it wasn't, oh, that was nice, how do we do it? I don't know. It's like, this is how we did it, and you can just keep repeating it and finessing it to get it so perfect for what you want. And trading and investing is that. Property investing is just the same. Any endeavor is the same. The game of life is exactly that too. And I know we talked about 5 tools that you need and that you should be using in an investment space, but everything comes down to one simple thing, and that's knowing what you want, and then you can build a plan to get there.
Beautiful. And you can pick the tools that you need and
then
want to
you can
use as well.
customize the tools that you can get there. And the idea of it shouldn't be stressful. It should never be on autopilot. You should take an interest in it, but it should get easier and easier as you start to scale. You know, investing, people always have a goal when it comes to their investing. I want to be rich, I want to make money, I want to be profitable, I want to retire, whatever it might be. And that's the end game. That's not the goal. That's the byproduct. That's the byproduct of it. Becoming consistent is the number one goal that you should have. And then second to that is becoming confident, because the more confident you are, the more asset you're exposed to it, and the bigger the asset you've got exposed to it, the bigger the number at the end of the game, and the quicker you win the game. But if you just focus on profit, making money, got to be successful, got to be rich as your starting point, it will never work. You've got to backfill it, work out what you want, break it down, become consistent, become confident, and use the tools that we've talked about, because they're all really valuable things in the deck of the ship that's going to get you there.
Indeed. Well said, AB. Thank you very much.
My pleasure. Anytime, Mitch. There you have it, guys. Make sure you give us a review and a rating, and share this podcast with a friend or colleague. It helps more people get the show.